Happy New Year! I hope 2025 is off to a wonderful start for you and your family. I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team. Today, I'm excited to be with you to recap the highlights from the fourth quarter of 2024. The biggest story was the American people once again electing Donald Trump as president. In addition, Republicans gained control of the U.S. Senate and retained control of the House of Representatives. Markets have been a mixed bag since Election Day. The incoming administration's talk of additional tariffs has investors' attention. While it remains to be seen how much of the tariff talk is just talk for the sake of negotiations, U.S. small-cap stocks saw a bump higher right after the election. This was probably because investors expected large companies to be more adversely impacted by tariffs because they have a larger international presence. But by the end of the quarter, U.S. large-cap stocks, as measured by the S&P 500 index, outpaced U.S. small-cap stocks, as measured by the Russell 2000 index. That's a reminder that the economy is complicated, and each policy issue can have multiple facets. On December 18th, the U.S. Federal Reserve cut its benchmark interest rate by a quarter point. This was the Fed's third consecutive rate cut. However, the Fed signaled fewer rate cuts in 2025 than were previously anticipated. Generally speaking, when the Fed cuts rates, it's good news for the stock market. However, longer-term bond yields moved higher at year-end. The combination of higher bond yields and a slower pace of future Fed interest rate cuts were not perceived as positive for small-cap stocks. Smaller companies tend to have higher debt and lower credit ratings than their larger peers, and thus, higher interest rates can be more impactful to smaller companies. International stocks fell on the quarter, but the tariff talk and its potential impact on international companies was not the only reason. Economic growth is already relatively weak in other parts of the world, and international earnings are growing slower than in the tech-heavy United States. Non-U.S. stocks, represented by the MSCI ACWI ex-U.S. IMI, dropped 7.6% in the fourth quarter. In the bond market, rising bond yields meant declining bond prices, and the Bloomberg U.S. Aggregate Index decreased 3.1%. Of course, the fourth quarter also marked the end of the year, so let's take a look at the full year 2024 performance as well. The S&P 500 was up 25% in 2024 after climbing over 26% in 2023. The S&P 500 rarely posts gains of 20% or more in back-to-back years. The last time it happened was in the late 1990s. Prior to the 90s, it happened in the 50s. As we have talked about before, much of the gains of these last 2 years have been driven by the very large Magnificent Seven companies. Apple, Amazon, Google's parent company Alphabet, Facebook's parent company Meta, Tesla, Microsoft, and NVIDIA. Together, they outperformed the broad market once again in 2024, gaining more than 60% for the year. As always, Wespath will continue to monitor the latest market movements and update you on the most important developments. We're here to keep you informed in 2025 and beyond to help you achieve your long-term goals.